Should you buy a sector ETF or just each stock in that sector? First, what exactly is a sector? A sector is a group of businesses in an economy that share similar activity, products, or services. In the stock market, there are 11 main sectors: healthcare, materials, real estate, utilities, energy, financials, technology, consumer services, industrial, consumer staples, and consumer discretionary. For example, JP Morgan Chase and Bank of America are part of the financial sector. ExxonMobil and Chevron are part of the energy sector. You should get the idea of what a sector is all about. Second, there are ETFs that track each sector. If an S&P 500 index ETF tracks the 500 largest US listed companies, these sector ETFs track the companies in each sector. For instance, XLF tracks companies in the financial sector. XLU tracks companies in the utility sector, and so forth. In this video, we're only going to look at the SPDR sector ETFs: XLC, XLY, XLP, XLE, XLF, XLV, XLI, XLB, XLRE, XLK, and XLU. There are other companies that have sector ETFs, but the SPDRs are the largest and most liquid ETFs. Now that you have an idea of what a sector ETF is, should you invest in them or just buy each company? Let's look at XLK, the sector ETF that tracks technology stocks. XLK is made up of Apple, Microsoft, Nvidia, Visa, MasterCard, Broadcom, and so forth. Let's just pick those 6 biggest stocks because there's a lot more companies that make up the technology sector. First, we'll compare owning XLK to owning each of the 6 stocks equally. Then we'll compare owning XLK versus owning each of the 6 stocks based on their allocation. For both, we'll look at the performance over the past 10 years. XLK over the past 10 years has gained 369%. That means investing $60,000 in XLK 10 years ago will be valued at $282,000 today. So then what about $10,000 into each of the 6 companies: Apple, Microsoft, Nvidia, Visa, MasterCard, and Broadcom? If you had invested $10,000 into each of the 6 stocks, you'd have $927,000 today. Of course, you won't get that going forward. In fact, 10 years ago, those companies likely weren't a big part of XLK. So then what if you allocated $60,000 based on the percentage in XLK? $24,000 would go to Apple, $22,000 would go to Microsoft, $4,000 in Nvidia, $3,000 to Visa, $3,000 to Microsoft, and $2,000 to Broadcom. In 10 years, that $60,000 would be worth $654,000. Again, it would be hard for those 6 stocks to even match how they performed, but it does reveal that investing in individual stocks may be more lucrative than a sector ETF. The downside, however, is choosing the right stocks and hoping they don't go bankrupt. Diversifying with a sector ETF can help negate large losses just in case. To recap, here's how each performed if you had put $60,000 into those 3 options. $60,000 in XLK is $282,000 today. $60,000 equally is $927,000 today. And $60,000 proportionally is $654,000 today. Try this with other sector ETFs and see if that's the case for all of them. So what are your thoughts? Do you invest in sector ETFs or just individual stocks? Comment below.